Silver will outperform gold over the next year or so. If you go back and look at the prior bull markets of the last 50 years in gold, silver tags along, but quite often during a lot of that bull market, silver flip-flops around, sort of like a wet noodle. Yeah, it's going up gradually with gold, but it's not sort of with the same tonal firmness. And so it's discouraging to look at silver. But it's late in those bull trends that silver goes ballistic. In the latter phase of this bull market, and we might be approaching that in 2024, 2025. After all, it's been an 8-year-old bull market already. Gold bottomed 8 years ago to the month. You get that old, the bull markets are 9, 10 years sometimes. But it's in that last year or so where the ballistic nature of the market occurs. And that's when silver goes ballistic.
Michael Oliver, the founder of Momentum Structural Analysis, has been in the financial services industry since 1975 when he joined E.F. Hutton's International Commodity Division in New York. At the firm, Michael studied under David Johnston, head of Hutton's Commodity Division and chairman of the COMEX. With his almost 5-decade experience studying market trends and providing analysis for large institutional investors, including banks, large asset managers and pension funds, Michael has been around for a long time and has seen it all. According to the renowned analyst, we've been in a precious metals bull market since 2015, with lots of smaller bull and bear rallies in the midst of the larger rally. While gold has put in some great moves during this period and is now trading close to all-time highs, silver continues to perform below investors' expectations. However, Michael is certain all that is about to change in 2024. According to him, the white metal lags gold and is slow to put in huge moves during bull markets. However, as we draw closer to the end of the bull market, it slowly begins to do better until it is outrightly outperforming gold. Michael believes we are now at that point of the rally. The point when silver, which has so far been disappointing, begins to show signs of extreme upside volatility until it completely outshines gold. During a recent interview with Liberty and Finance, Michael gives his outlook on gold and silver for 2024, predicting that both will see significant price increases, but silver will be the real opportunity of a century. We will now bring you clips from Michael Oliver's interview. Please watch, share and like this video. Also, ensure you subscribe to the channel, turn on post notifications, and don't forget to drop your comments and observations in the comments section. Thanks and enjoy the video.
What happened in our view when gold went up early this month, in fact, it was December the 3rd, Sunday night electronic trading. Gold tagged the front active month, February, tagged 2100 for the first time in history. All the prior highs of 2020, 2022, and early this year were all up in the 2050 level, but never could get to 2100 on a $50 increment basis. When you hit 2100, there were so many buy stops that were just laid there, ready to be triggered. Of probably one, shorts who wanted to get out, and two, new longs who said, okay, I now believe I'm going to get in. And within 40 some odd minutes, you went from 2100 to 2150 with about just short of 50,000 contracts traded. That's unbelievable. What it says is there was a massive amount of buy stops there, that once you hit 2100, they were executing the orders, okay? And you gushed $50 higher. But as soon as you did, if you'll think about the mechanisms involved here, all the buy orders from 2100 through 2150 were filled. So if the market started back down, and as I understand it, the Bank of International Settlements sold some gold there was nothing below. And all your buy orders had just been exhausted. So it was like a void. So when they sold, whoosh, you went back down and you dropped for 1 week, got down under 2,000 again. I think it was 2080 something. And all of a sudden you're back up pressing 2100 again, this time resolutely, not explosively, meaning demand is driving gold right back up again. So that collapse we saw from that 2150 high was largely an aberrational thing due to the nature of the orders that were filled, the void in the market, and therefore that it largely explains the vacuum effect when it started back down again. But then again, demand came in and we're back up pressing that level. Where you close the month here tomorrow. It's a new high monthly close, new high monthly close above prior highs, et cetera, and it did it resolutely. So we still see gold as quite an opportunity. We see it as the prime alternative to the other asset categories, including T-bonds, which we're positive on T-bonds right now in terms of rising price, lower yields, but not in the long term. Gold is, I think, the chief beneficiary because, again, the Fed has to soften, and that's what drives gold, is central bank monetary flooding. I think it's already started to change in that there are already some asset managers out there, very large ones, the Ray Dalios of the world, Druckenmiller, Gundlach, and so forth, who've expressed views that are pretty clear and sometimes not so clear, but clearly you can imply that they're not real trusting in the stock market. Now, any large portfolio manager running a large fund, you have to be there if it's going up. Okay, so even if you don't like the stock market, you're competing not with the market, but with your competitors, other asset managers. And if they're long the stock market, and despite the narrowness of the advance, they're making money and you're not, it hurts you. So you have to be a buyer, even if you're a doubter. But over time, enough evidence builds up in their minds to where they shift some degree of money into the monetary metals, or more likely into the blue chip gold miners. Once we get some evidence of rollover again in the stock market, it won't take a lot. You're going to get more of that asset class flow out of stocks into gold mining stocks. And that'll be further evidence that, there's a mental shift underway.
The major reason why Michael is so bullish on gold and silver is the perceived long-term weakness in the stock market. Though various stock market indexes like the S&P are currently trading at or near all-time highs, several billionaire investors and iconic analysts have predicted years of extreme weakness for equities after a US or even global recession. Many believe that a recession or a prolonged period of economic downturn will hit towards the end of 2024 or early 2025, negatively impacting the stock market for years to come. Some of these analysts are predicting that after the recession, the stock market will stay down and may not make new highs for at least another decade. In contrast, these iconic investors and analysts are more bullish on commodities and precious metals. According to Michael Oliver, even big Wall Street players have begun shifting focus and some degree of money into monetary metals and blue-chip gold miners. The analyst adds that the proof of this move with more to come is the recent performance of those big blue-chip miners. Just a year ago, they were underperforming gold but now quickly picking up even more than gold on a percentage basis. During the interview, Michael also talks about silver and how it's about to outperform gold in 2024 and 2025. Here are more clips.
Silver will outperform gold over the next year or so. And if you go back and look at the prior bull markets of the last 50 years in gold, silver tags along, but quite often during a lot of that bull market, silver flip-flops around, sort of like a wet noodle. Yeah, it's going up gradually with gold, but it's not sort of with the same tonal firmness. And so it's discouraging to look at silver. But it's late in those bull trends that silver goes ballistic. It's the poor man's gold, so to speak. Now, I don't know to what extent that's the driver, but you look, for example, at the bull market that peaked in 1980 for gold. Gold had gone from a low of 103 in the summer of 76. And by 1980, January 1980, it was 850. Okay, huge move. But a lot of the gold move occurred in that last year, 1979. But if you look at silver in that last year of what had been, multi-year bull market, actually you can go back to the early 70s where that bull market really began in the $30 zone. Silver went ballistic. It beat the pants off of gold. And the same is true in the 2000 to 2011 bull market in gold, where in 2010, silver started to outperform gold vastly. And we expect the same thing now. So what we're monitoring for is not just the net trend and the momentum dynamics of silver, which are, by the way, positive. Yes, they seem to be lagging gold, but they're really not. There's more waffling sideways for the last year in terms of where's silver in relation to gold. It won't take a lot in terms of that spread relationship. For example, I think the spread right now is about 1.8 something percent. You get up to about 1.2 something percent on silver versus gold, meaning 1.18%. Is where it is now. You get up to about 1.2% where the ounce of silver is worth that much of gold. You're going to break the spreads out, meaning the spread relationship between silver and gold will go from a corrective mode or sideways mode recently into an uptrend again. And I think that'll be pretty much timed with silver starting to go ballistic again. in the latter phase of this bull market, and we might be approaching that in 2024, 2025. After all, it's been an 8-year-old bull market already. Gold bottomed 8 years ago to the month, okay? When you get that old, the bull markets are 9, 10 years sometimes. But it's in that last year or so where the ballistic nature of the market occurs. And that's when silver goes ballistic. And a point I've made before is that's when silver could go up to, for example, if you look at a silver spread versus gold going back 50 years, you'll see that it's gone up to 2.5% to 3.5% of the price of gold quite a few times, not just during those bull trends, where the 1 ounce of silver is worth 2.5% of the price of gold. Well, if gold does a normal geometric, logarithmic scale uptrend, as it's done a couple times in the last 50 years, where you measure bear low to bull high, 8-fold moves. They're almost common. Well, we started from 1,050. 8-fold means $8,000 gold. And you think that's outlandish. Well, it's done that ratio move a couple times before in the last 50 years and had far less motivation to do it than our fundamentals right now, which are far more dangerous and therefore positive for gold. Well, if gold went to 8,000 and silver went up to 2.5% of the price of gold again, whoa, a couple $100 silver. Now, is that outlandish? No, it's not. Think about it. And a lot of that usually occurs very late in the bull trend. And I think we're starting to get into that phase right now.
According to Michael Oliver, the recent moves in gold are an indication that everyone, even non-gold bug asset managers, is observing the monetary consequences of quantitative easing and excessive money printing. As long as the Fed continues to print excessively to support the bond market, the dollar and other fiat currencies will only continue to get weaker. That's why investors are rushing towards stronger and better alternatives that are free from the Fed's reckless policies. More money printing will significantly benefit gold and silver in 2024, rather than negatively impact prices. Do you agree that silver is going to significantly outperform gold in 2024? Please drop your thoughts on Michael Oliver's interview in the comments section. Also, ensure you like this video and subscribe to the channel for more videos like this. Thanks for watching.